Good morning. It is March 18th, Wednesday. Um, and we start another trading day. We are 2 minutes ahead of the market open on DAX. The market is now in a strong upward movement. And a short recap. I was again late, but if you look at the 8 o'clock trade, it would have worked out beautifully. This was it was far away from the VWAP. It was 8 o'clock. So we now moved on to the VWAP and moved it down. I expect now a comeback to the 8 o'clock. And I will now enter potentially ahead of the market on this here candle. This is not what the strategy would suggest, but we also have to rework the strategy given what has happened in recent days. I have looked at the data for the past months and realized that that I essentially need to be more careful in my entries and adjust the strategy so that it is generating less losses when we don't have big winners. It was especially frustrating yesterday with a couple of mistakes I made. So I'll be going through the data and the transactions yesterday, which should have generated a hefty profit, but somehow we ended up in a significant loss. You will see why. For now, the market opens at this point lower. We have a 50 pip stop loss here. It might take us out right from the get-go. There we go. Okay. That was a fake. I accept that. Let's wait for the first bar to form. In the meantime, we can look at the history here of yesterday's actions, and I will show them on the chart, and you will see what has happened here. That's a bit of a mess, but if we take them one by one, this was the first breakout, and we took it according to the strategy. This was a valid loss. We survived all this chopping here, but we got snapped towards the end. So at that point, we entered short, but with a higher stop loss because of this chop area here. That proved a mistake. We got just cut, just a couple of pips. Longer stop loss would have been enough, but it wasn't. So that happened right afterwards. It was 9:30. And there were, then we attempted to go long in here to compensate for this pullback. We did. We took profit here. That was okay. We tried to again short here, but this move up has taken us out. Again, just a couple of pips more and we would be fine. The market turned back. So we entered short again on our strategy and we were clipped again. This was a valid stop loss. So now here we went long again, and this is the one that I realized almost to the top of the move here, 250 pips. That was a nice trade. But then things started going bad. And here we added to it, but the market reversed strongly. We were stopped out. That is fine. We added to it. I mean, we were adding here, and then we added here. Both were stopped out. This one was stopped out for full risk. This one was stopped out for break even. That's a valid trade. But you notice we would have here, if we applied a full risk in here, we wouldn't have lost, but that's fine. That's part of the strategy. We tried to enter here, and this is something I have a problem with. We tried to enter on down market to compensate for having missed this move here. That resulted in a loss. Again, if this stop loss was longer, you wouldn't have lost. This was just a going long trade. It was stopped out for almost a break even. That is fine. We tried to add in here. We were stopped out just a couple of pips. And these are real heartbreakers. I mean, these are real heartbreakers here. So what you see here is that these three trades, this one here, this one, and this one, they were all stopped out within a couple of pips of a reversal. This one here was stopped out just, well, maybe 2-3 pips. Had this been a real move, I mean, 4 pips maybe, and we would have been in the position. Same here. The market came back from these highs here where we were adding successfully, very well, adding here as well, according to the strategy, and adding here, which wasn't very good. And we were stopped out. The low of this was 23,6776, and our stop loss was 23,679 versus the low of 77, 2 pips, and we would have now been about the 200 pips in profit for each of these positions, 250 even in the morning. That would be times 3, so that's 600 pips. That is a heartbreaker. So, and of course, right now we got faked. But what I will do for now is I will not enter a long in here. Or maybe I will. This is a definite bull candle. Right in here, I might just enter. Because that looks like a valid retracement. So we entered in here. That was a valid stop loss. Okay. Had we used a full risk instead of trying to jump on a half risk, we would have lost as well. So that's okay. This one, valid break-even stop loss. That's okay. That was an add-on. And this was an add-on again on a down market. So a down moving market. I don't like this. So, but I was trying to re-enter, and it was a valid instinct because the low was somewhere here in the evening. And then throughout the night, the market rallied. I have entered now a long position on the strategy, on the classical strategy that we have a breakout below the first candle open. There was also a quite significant retracement where I got caught, as you saw. And that, of course, makes me already puts me in a loss for today. I have tried to enter a sell order late after 8 a.m., but I decided to get out of it because it wasn't really strategy. So not cool. What is good now that we have the 8 o'clock trade in our favor, the 8 o'clock level is here. So I'm expecting to go at least to here, even if it's a fake out, this move here. So that will give us some time to think about what to do. Just give me a moment. Okay, I was just checking the news here. Good. I'm hoping this will go higher, but I'm not hopeful for a bigger move. Overall, as I've indicated yesterday, that breakout from this level here has moved significantly into the profit area. where I forecast this would go all the way to the support level at least. So unfortunately, we have used up most of this move here, but we still have 200 pips that we can work with. And well, that's good to have. If there's going to be any major pullback here today, I don't know, but I have set up a buy limit order here somewhere on this level. So that was yesterday. Now I'm looking at this here, that we have this straight, very strong line here of support. A channel has formed overnight. That overnight, of course, may be challenged very easily, but it is there. So you have to take it into account. You can see these very clean, beautiful moves in Heikanashi overnight. I've noticed that overnight recently has been a better way to trade than the day ones, less choppy. But yeah, well, it's always hindsight, right? We are now clearly moving into an uptrend, both on 4 hour, 15 minute, and 5 minutes. So the trend is definitely bullish. But what I have noticed recently is that the breakout strategy, especially after yesterday, seems to be giving at least first false signal. So in here you can see there were multiple fakeouts yesterday, as we remember that. In here there was also a fake out, and then what we could consider a valid move down. So the day before, well, you could argue if this was a move down or a fake out. This was 70 pips, so not enough to take profit. I would say at least 100 pips would be a valid move, and here this wasn't. So in my book, a fake out. And then the next one here, we have the first move going up in the direction of the trend, but then it goes back and goes just below the opening range. I remember that was expected and hurtful because I had to go short in here. So a fake out, right? Again, only 40 pips into profit, not even 50 pips. And if you go all the way back, there was only one instance within the previous month where there wasn't a fake out on the first entry. So here, a fake out, and then another fake out, and then going down. So we had one or two fake outs at least in the opening trades. Here as well, fake out, and then another fake out. So two fake outs. And this one, another fake out here, goes up, and here then just goes straight up. This was also a very volatile market. And it's moving backwards here. Well, if you count the number of pips, it went up 70 pips. So not enough for any kind of reasonable take profit. Therefore, a fake out. Again, in case of fake out. So here, 50 pips went the wrong side and then moved back. So what I'm thinking is, given this and how persistent this trend is, I would be thinking unless there is some circumstance which would speak to the contrary, like today, a very strong reversal, nice pullback, and some sort of convincing argument, I would be thinking of actually fading the first move. This is one of the exception where we had this super strong move that there was no technical fake out. But if you look at this, the first entry did actually go almost 50, 60 pips in the retracement before it actually went down. So that first breakout, you probably would be stopped out. And then this one here, again, first move. This is your candle, right? So we start in here, it goes into here, fakes out for 50 pips or so, and goes back down, fakes again, 15 pips or so, only then moves up 200 pips. And then here again, there we go, 30 pips, and only then moves up. So I would be thinking that it is going to be more profitable, at least for the current market, to move to a strategy which would fake the first end exit. And just wait for the second breakout. Now, what does it mean that we would have to now go short, right? And we just might, because if you see, if this doesn't go up, there's no momentum. I will actually close this position and reverse it. What we can, of course, risk in this scenario is that at the point where we have a very strong move upwards and the market just goes from the get-go, right? It just goes. We lose this opportunity to enter. But as you could see, the market quite often comes back to the levels where the opening levels later on in the market. You have to hold all these and add to the trade that doesn't really exist, but you still have the opportunity to come back early and later on um, and just add to it. In case the market just goes like in here, and this was the only case where it actually moved like hell and didn't look back at all. And this was this this super bearish open here. Even here it faked out, right? This super bearish open here, that was the only, what was it? Where the war broke out. It's Monday, there it is. Even here, if we waited for the breakout and then shadowed it and just tried to reverse it, we would have gone 20 odd pips into loss and then 50 pips into profit, right? So would have time to actually secure this with a break-even trade, or maybe not. Maybe you would be stopped out 50 pips lower or 60 pips lower, enter here, and on such a market, you would still have made a hefty profit, especially if you were able to add to it. So that is what my experience right now is. And yeah, let's see how it pans out. For now, the market is seems to be reversing as well. So let me see if I can get a better price. We went up about 18 pips. I would expect it would go up at least to the level of like somewhere like here. This is the 8 o'clock trade. This would be my sell signal for a fake out down. But given that I'm overall bullish here today, and the chart seems to be indicated we're going higher, I would rather wait until it goes here and then buy, than try to fade the move and sell, because it might just go up, right? So I can see I'm a little bit hesitant what to do today. It's not ideal, but the statistics seem to be overwhelming in recent months. So we have to take it into account. Let's wait how this candle closes. As of now, it's forming a doji candle and indecision candle. The reason for the strategy being so aggressive and relying on this 5 minute range breakout um, is that it's psychologically easy to maintain. You don't have to be patient. You don't have to um, see moves get away. And I think this is why I selected it, because it just allows you to bear that loss easier. It is, however, relying on being aggressive in a bull market, assuming a trend day. So it is losing quite a lot, but it is losing in a way in which it's maintainable. But you have to be consequent in adding to the trades when they go in your direction. This is very, very important and very difficult to do, especially after a lot of losses. So, as in you might be just scarred and psychologically scarred and afraid to add, right? Especially if the market reverses only one time after time after time. Um, but that's what there's always a difficult part in any strategy. So we seem to have realized the same scenario where we're reversing. It's I will now reverse as well. I have broken my strategy here, but I'm thinking how to manage the stop loss here. Well, it has to be here, right? So I will enter the market a little bit later if it doesn't go into my favor. It was bad call. That was a bad call. And I have done this on a fake. Oh, that was 3 minute candle. Ay, ay, ay. Wrong move. Sorry, guys. I need to switch again. I need to switch again. Oh, okay. We're in the move. Let's stick to it. We're gonna go buy stop in here. If we ever get here. If you ever get there. Alright. And this would be the first fake out. Now the question is, is there going to be two or one? Well, let's see. In any case, we sell in here. That's our sell stop. This would be a genuine entry. And 60 pips. There we go. as you can see, the crude oil has rolled over, so the contract has now moved to the next contract. I don't exactly know which it is, the underlying futures contract, but there was a 4 pip backwardation. That means that had you been in this position here, you would have lost 4 pips, but you would have gotten a swap equal to the 4 pips. As essentially selling this contract, this future, and buying this future, which is cheaper, so you get the swap. But for a less price. That means that you essentially maintain this price here, right? But if you're long, you have this negative swap. Sorry, positive swap. If you're short, you have this negative swap. So it gives you so yeah. So backwardation means that you're essentially sort of being teleported to a lower price without getting any benefit from it. So it's not good for you. It's good if you're hoping for a buy because you're essentially set back. So your price is lower, but you haven't taken any loss from it, and that is something that's you would have to watch out for because longer term these contracts roll over quite frequently. This will become significant. Emissions are still falling below, so it's good that we stopped out, although they show the sign of retracement. I'm still looking for a buy if they go back into the range. Gold is falling. Oh, nice. It's poised for a break lower, maybe. And Bitcoin is actually building a bull flag here. So I might consider entering this somewhere later in the day. I don't normally trade Bitcoin. It is an instrument I don't fully understand, but it is on a lower price right now, so maybe. The point is, I read an article about Bitcoin where it says about how miners can no longer rely on the halvings and then the super high um, appreciation of price of Bitcoin afterwards, because after the recent halving it only moved up like 1.5, when normally it was 10 or 20 times value multiplication. So obviously this now becomes a much more regarded asset, much more stabilized, because BlackRock and other funds have entered it and they hold it. So it no longer has these wild swings. That was somehow beneficial for the miners. I don't exactly know the details, but it tells me that you have to be careful with Bitcoin. I never understood it, to be honest, that well. Okay, so we're now below. We're moving back into the range, which is somehow good for us. I don't know how you ended up in this place, but it feels wrong, but it is what it is. Um, I'm thinking I want to secure this trade with a break-even stop loss. I don't want to be exposed to any major risk in here. I don't know what it's going to do. I don't have any assumption. Um, and then I can move my buy stop over here, hoping it wouldn't be in a triple fake out like yesterday. So despite this initial setback here, which again was super frustrating because it's just, I mean, I had my stop loss at 2309.6, and the market dropped down until 2305.6. So 4 pips. I mean, come on. And you saw I had a 50 pip stop loss instead of a 60 pip. Had it been 60 pip, I would probably still be in the market. Wouldn't be happy about it because I would be in a loss again, but I would still be in the market. And I was looking at the trades from yesterday. I was trying to figure out what went so tragically wrong. And I think it's just a question of being consequent. The first trade gets a stop loss. And then if you add on, you have to secure the previous trade with a stop loss. If you add another one, you secure it with a stop loss. If you are in a loss in the add-on, you don't add anymore, right? You get stopped out, you wait until the market moves up or it takes out your previous position. There is no re-adding on the way down and hoping to get a better price. That's, counter our strategy. Our strategy says we hope for a sustained move. But I was thinking about making this a double risk structure where the first position has a full stop loss maintained until the end. So that we avoid this super, super frustrating stop outs like in here. And we know that the market likes to come back to the opening regions precisely because a lot of people here enter on for the breakout and then they set their stop loss to break even. So there's a lot of liquidity in here, right? So you don't want to be in a stop in this area. You want to be lower, below that. But all the interim have to be strictly covered to avoid those losses. So let's see where we are. We are moving down. Now the VIX is more or less on the levels where we left yesterday, but it is moving lower somehow. So it doesn't seem to be a major move. The European 50 stocks, yeah, do nothing essentially. They're somewhere like to the bottom of the opening range and they don't move very much. The volume is mediocre at best. And we're now pulling back. The opening buy was very, very big. Then the remaining ones were, well, under 1,000. That to me is a sign that there is no major move. Yesterday, if you can see this, that was here. This breakout here was over 1,000 and then also under 1,000, right? There was low volume. We're out. Wow, that was quick. What the hell happened? I shouldn't be out. Man, I hate this broker. Look at this. Okay, no, that's fine. That was my stop loss apparently. Okay. So now, looking at this, that was a 53-point move down to the downside. Let's see how this candle closes. I mean, we're in the middle of the range. That's fine. Looking at the looking at this position here, we would have like 120 pips retracement yesterday. That is slowly coming to here, which would indicate maybe a second fake out, which it does right now. Volume is low. And the war intensifies. What's the news today? Oh yeah. Okay, this is a Fed day. FOMC today. Is this going to impact DAX to some extent for sure? And the inflation here is at 11. Okay. Mhm, mhm. Probably a range day then. And like 10 pips, then enter. That would be a 60 point. It's not a target I would like to set for 100 points. Would be minimal. Let's see if it gets down to 100 points. Say from here, 100 points would be here. That's reasonable, right? Then move back up. I'll hang back. I'm looking at these wicks here, and I'm thinking this might actually be going up now. There's a clear support area in here. If that holds, that buy stop would make sense. And I'm thinking that sell stop maybe for today may not have that much sense. I'm afraid to remove it because, the strategy is what it is, right? It's a breakout strategy. And we already had one takeout, so this probability that the second one will also come is lower. It's not very low, on the other hand. I mean, I think it's 50-50, but it is there. So I'll remove this stop loss for today. After this stop, I need to hang back and figure out what's going on. This drops in here. I mean, it would also be because there was this correction here. This was a move. There will be a pullback, then a move again. And I'll wait until it breaks and then I retest. I'll enter on the retest. See, I am bullish here. This looks like a bullish trend. We are on the support line here. It's clear. I think I'm either going long than short. This went on 30 pips. We are already on 40 below. It's bouncing again off of that zone. Let's see if I can maybe swipe the lows. Let me try the buy limit here. What the hell? I'll play freestyle today. See, the one thing is after a day like that, a lot of people will be rethinking their strategy. That effectively was also quite a mix. So a lot of people are gonna get burned and trying to swap. So maybe even today we actually get this decisive pullback and there's gonna go push through. So I'm really hesitant what to do right now, to be honest. I mean, it's clear push up so far. But it is stalling as well. See, it's just can't push. So we are talking about 15-minute candles. We are approaching the third 50 minutes. So this is 1, 2, 3. So this is the range here, the 15-minute range. And I bet Tom Hoover will buy here or somewhere lower even. He says that the third 15-minute bar, so this would be effectively this one. No, sorry, this one, essentially shows you the direction. So the market has now done its up and down. Now it's ready to set the direction. So let's see which way it goes. We have the third 15-minute bar set. Wouldn't be a trading day. Wouldn't be a trending day because of the fad, right? So the fad is let's take a look at the calendar here. Um, oh, there ain't no history. Oh, come on. I found see historic comments. Where's 2026? Mm, so you have one in January, 28th, now March 18th. Last one was in January the 18th. Let's see where we were in DAX. Okay, there's no bouncing back. January 18th. Um, January 18th. That is somewhere here. 1918. Yeah. Nothing happened there. That's 16th of January. What? Are you sure? 27. 27. January 27, yeah. So there was a significant move down, 100 pips, and it just stayed, bounced around. Nothing really happened, yeah. And I recall I don't like FMC days. Oh, that's a dodgy. Ooh, that's a dodgy candle. Man, right in the middle of the range. Shit. Yeah, that's hard. That's not tradable. I'm gonna wait. Okay, just to put it into perspective, have we taken this trade here, right at the breakout? I would have yielded 50 points. I mean, that's almost a risk on unit of risk, so that's not, no, not insignificant. It's chopping around in here. I think I'm gonna hang back and wait for it to make some move. Um, we have almost avoided the first breakout. Chop. Effectively, we have, right? Offer is not even that. Um, yeah. I think looking at the VIX, which is still dropping lower, the oil, which is hanging steady, um, I don't see a reason for it to not to break higher. So I'm using that strategy here as it was intended. We have entered a long. We'll see if it now affects again and drops immediately right back, or if it maybe continues the move. These wicks here make me confident. So we may have some results here. I'm thinking it actually may be worthwhile to start the stream a little bit later because I think there's really much happening recently. Um, and this is really where the action starts, right? Then somewhere, because then the initial chop, I mean, recent days, of course, it's different, right? Some days it just goes straight out of the bat and it just continues. Sometimes there's some wild swings. But recently it's not been very exciting in the morning. Albeit I have taken heavy losses there. So we need to recuperate. We need to slow down a little bit. Maybe step into the market a little bit later. If it is like this in the morning, indecisive and so forth. Now, that's of course fallacy as well. You have to be careful of because the moment you get tired, the moment I want to switch a strategy and I want, I'm doubtful, this is where the moment comes that you actually would make the most money, right? So that fluctuating between strategies is very, very difficult, very dangerous and needs to be avoided. Um, but I'm just looking at the overwhelming statistical evidence recently that there's a lot of chop in the morning, and I don't want to be a part of that anymore, to be honest. And it's just too much losses. But for now, we hold on. Breakup was there. We sort of avoided the first one. We didn't capitalize on it, but we limited the loss. And just if we had a full risk of a stop, I wonder. Let's say we entered somewhere here like we did right now. That was 56 points. And the spread right now is 1.4. I probably would have been stopped out. If not, then just barely so. Like 60 pip stop loss. If we can break above this level here, then it will be a good momentum to go up. In the higher time frame, where are we? Nowhere significant. Yeah, I would love it to go just higher. Like Heiken-Ashi positive and just boom, right? And we just keep on adding. Um, I will see. February was a shutdown, right? Or something that they didn't have the meeting. All right. The war is moving in the background a little bit, to be honest. I'm looking at the news outlets and they all seem to talk about Fed meeting, of all things. Now, Fed meeting is more in focus than, at least on the media side, than the war. Interesting. Let's go. Come on. Come on, come on, come on. Ooh, wow. Rejection again. If it doesn't manage to make a higher high, uh, then a higher and lower low is very possible. That will be dangerous. We have 40 seconds left in this candle. Still has some time to push. We definitely need to go up right now. I was trying to open the poly market and the Kalshi websites, but for the longest time I'm not able to. Kalshi here as well. These are these prediction markets, and they just don't open for me. Mini gap always gets closed, and that to me, if there are those mini gaps which break between the candles, that shows me that the market is illiquid, and it usually signifies some sort of a reversal. Short term, but yeah. It's 10 o'clock. I'll end the stream there. For a moment there, I was afraid this is going to be a pullback and a return to the range, another fake out. It seems that was denied and bounced off a view up for now at least. We'll see if this candle closes like that. Would be great if it did. I'll set some alerts to the top side to add to this trade if we move up there. But I will have to be very careful today because, well, it's a Fed day, so I'm not really super happy about or super optimistic about it going in anywhere in a decisive direction. But we just well could do, 1, 200 pips. That's good enough. If we manage to avoid the losses. I'm happy about the fake out. I looked at the data and just maybe avoid the first entry. And for now, we are definitely looking at a well, maybe not definitely, right? But this is looking like a bullish spring up, like a hammer. Not hammer because hammer is in the down swing. Like this is a hammer here. There was definitely a longer. That's technically a doji, right? But the bottom wick is way longer than the upper wick. Yeah, and with the algorithms now, I think the candles actually provoke an opposite behavior because the algorithms are hunting for people who just use these candles to enter. And they just fade the move. Um, but it might be a spinning top, in fact, and we'll see. Come on, come on, come on, go up, go up. I need you to go up. All right, pushing higher. So we're now 20 pips in profit here. Approaching the top, the highs. I'll be looking to add to the highs if it breaks above here for retracement. It needs to break. Come on, come on. No, 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 no. We're not doing that. We're not reversing here. This is a double top, and I'm super unhappy about it. There we go. Perfect. All right. That was quick. All right, we have added. Let's see if we continue. Volume is low. VIX 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 is holding. All right, let's go. Yeah. All right. So far, bottom wicks, no major top wicks. We're at the high of the range. What was the 1 to 3, 1 to 3, this was actually, should have entered long here already. Wow. Maybe only a chance, but no, 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 no. We're not doing that. Goes back, it goes back. That's it. Do not go beyond using um, 2 risk units at one time. Oh, you said fuck. Now this might be the touch of the opening range, but it's a strong momentum. Wow, engulfing. Super bearish. God damn that Nasdaq. Well, VWAP, come on, hold it, hold it. Alright, I have the alerts. There's something to do here. It's gonna chop around here. It's gonna take some time. The longer it stays here, um, the longer it's bad for us then because it might just push down. Um, especially for the Fed, which might hike the rates. Let's see what they do. We do have this support zone here, but we will already be stopped out of the first position. The add-on, sorry. Had we secured our position, we would already have been stopped out. And yeah, well, this doesn't look good. It's a very strong candle. Come on, 30 seconds, make a wick. Make a wick. I know you can do it. Just go back here. No wick. No wick whatsoever. No wick is given. No wick is given. Boo-hoo. Boo-hoo. I'll hang back and come back to the stream at around maybe noon. Check up on what's going on there. Yeah. So let's see where it goes. I'm thinking here when this gets somewhere here, I'll be maybe looking to step back in and see what happens there. I hope it doesn't go like this. Actually, I do hope it goes like this. Huh? That's the buy limit I have there. I wonder why would I have this stop loss if I have a buy limit over here. That makes no sense, right? You might just as well extend it. It goes down there, it's a sell. That's the strategy. A double fake out. I don't think this would now go down. Let's see. Okay. Ending the stream for now on a positive note. Looks beautiful. We're in the middle, so we'll almost break even on the two trades. Let's meet back at noon. And I'll be adding the trades in here if it moves higher. And I'll be adding on a pullback, securing this with a break even, but it has to go beyond these highs. In fact, I can move these others here. I'm not interested for any kind of other price action. Yeah. Thank you.